In every field, there are certain basic lessons that lead to excellence. So what are the basic stock trading lessons that lead to success in the stock market? Well, that's the subject of this video. All right, basic stock trading lessons. Now, the first lesson is that you want to model successful methods. You want to look for something that's proven. I've seen trading systems that revolve around everything from how the planets align to, seasonal patterns of whether if it's raining in Spain or if it's snowing in Japan, then you make trade decisions based on that. Now, maybe it works for some people. I just don't think that's a system that's based in reality. I would tend to tell you to stick to things that work, whether it's value investing or whether it's trend following, trading with moving averages or on breakouts. These are all things that have been proven to be reliable over the test for time. So make sure that you look for successful methods. In addition, I also want whatever method you happen to pick, make sure it's congruent with your own beliefs about the market. And make sure it's also congruent with your own personality. If you're not a day trader, then don't try to day trade the S&Ps. If you don't want to sit in front of a monitor or have the ability to be able to focus on price patterns on an intraday basis, for 3 or 4 or 5 hours or more at a time, then don't get involved in that game. Find something that's going to suit you. And make sure that your reliable trading follows a sequence. Now, what do I mean by a sequence? Successful trading is made up of very successful steps. We've talked about modeling successful methods, but all methods break down to a particular sequence. Everything from confirming that a trade is afoot or that a setup has already occurred, the confirmation, a trigger, trade management, all of these things come into play. So whatever you pick, just make sure that you're aware of the sequence and that you implement it in your trading. And make sure it's a rules-based approach, that it has clearly defined rules that, you can maintain as long as you maintain your discipline. And that it has a signal, a setup, trigger, and trade management, things that I mentioned previously. Now, each of these three men right here, you've got Richard Dennis over here with trend following, you have Warren Buffett with value investing, and you've got Marty Schwartz over here with day trading futures. All wildly successful, very wealthy, but very different trading styles. Now, each of the trading styles has been proven reliable, and it matched their own specific personalities, which is why they were wildly successful at it. Keep that in mind. You want to do the same thing. Now, I also want to just say that prices have a lot to do with successful trading. This gentleman's name is John Henry. He is a billionaire. He is a hedge fund manager, primarily a trend follower. He's the owner of Boston Red Sox as well as several other sports organizations. And I won't read everything to you, but I just want to read the beginning of this. And it says, "I don't believe that I am the only person who cannot predict future prices." Notice that word, predict. No one can consistently predict anything, especially investors. Prices, not investors, predict the future. Now, in other videos, I have mentioned it's better to be an interpreter than as a predictor. You will go broke as a predictor. We have no idea where the market's going to be a year from now. We can look at the facts and some statistics to kind of get an idea that there's a bias in a given direction. But ultimately, the market decides, and the market's very fickle. It can change from one moment to the next, just like the weather. So keep in mind, prices you want to interpret, you don't want to predict. Now, let's go back and take a look at these two gentlemen here. When I talked about a method that is congruent with your personality, if you took any of these three gentlemen and then you switched them around and gave them a different trading style, all the success that they had would immediately vanish. I mean, they might have some, but they're not going to have the spectacular results that they had because it just doesn't fit their personality. If you tried to make Marty Schwartz, who's a day trader, become a trend follower, he would lose his mind. I mean, he doesn't have the ability to be able to sit still. He wants to be where the action is. Warren Buffett spends most of his day reading and looking for stocks that if the market's conditions change and they become undervalued, that's the point where he'll swoop in. So he spends time doing research to make sure if they ever get at that level, then guess what? He knows they have a competitive advantage, they have a moat, and he knows where the margin of safety is. Likewise, Richard Dennis may not necessarily care about any of those things. He's primarily looking at price action or the long term. He's trying to get big moves that he can follow trends from months to years even and just keep racking up gains and adding to his position. But if you switch any of them, all the success they had would just vanish. So we've mentioned reliable trading follows a sequence. It's a rule-based approach, and it has a signal, setup, trigger, and it has a trade management strategy. Now, let's take a look at one of a system where it's helping you kind of filter out, good trades from bad trades, and that's the CanSlim strategy developed by William O'Neill, who's the publisher of Investor's Business Daily, and he wrote the book How to Make Money with Stocks. His research, his style determined that there was a system. He's got an acronym here for current quarterly earnings, annual increases in the last 5 years, a new product or service, management or events, small supply and large demand for stock, talking about institutional traders, and the availability of the stock. He wants to buy the leaders over the laggards. He checks for institutional sponsorship, and then finally for market direction for the overall general market. He wants to make sure he's trading in the direction of the market. This is a system basically help you filter out trades from good candidates. And this is one of the sequences that I talked about when modeling a successful method. I'm not saying you have to incorporate it, but I'm saying it's a good guideline. So just keep it in mind. So to kind of sum up, you want to model successful methods, and you want a method that's congruent with your beliefs as well as your personality. But whatever method you use, make sure it's a reliable one that's been proven in the past that you can actually model, and not something esoteric or that's confusing. A good example is Elliott Wave. I see the reasoning behind it, but I personally have never been able to master it. Maybe it just doesn't match my personality and my beliefs. But while some people can use it, I've never been successful with it. I prefer to use something that's a little bit more pragmatic, and I suggest you do too. Make sure that it does have a good rules-based approach and that it's not just a system of entries, but more that it is a comprehensive system that you can use at every step in the trade sequence. All right. Well, listen, these are the basics. Go back, master it, really understand, and you're only going to benefit by taking the time to really kind of implement these things into your own trading. Hey, thanks for watching my video. If you like what you saw and you got something out of it, please do me a favor and give me a thumbs up below. And if you have questions or comments, then please leave them below. Now go and click the red Click Here icon in the lower right-hand side of the screen in front of you and subscribe. Once you subscribe, you'll get all my notifications of new videos containing trading tips, market insights, and techniques to help you achieve greater success in the market and become a better trader. Thanks again for watching, and I'll see you in the next video.